In this video, I will reveal to you the best ETFs for monthly high income and example high income results. Are you dreaming of a consistent stream of income landing in your account each and every month? Imagine a financial landscape where your investments actively work for you, providing a reliable source of funds that can truly make a difference in your life. If the idea of generating substantial monthly income through smart, strategic investments resonates deeply with you, then you've landed in exactly the right place. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this valuable information. Now let's continue. Welcome, everyone, to a vital discussion that could reshape your financial future. Today, we're diving deep into the world of exchange-traded funds, or ETFs, specifically those powerhouses designed to deliver not just returns, but a significant, recurring monthly income. We're not talking about small change here. We're talking about building a robust income stream that can enhance your lifestyle, provide greater financial freedom, and offer peace of mind. Understanding the allure of high-income ETFs. So, what exactly are these coveted high-income ETFs? And why are they generating so much buzz among savvy investors? Simply put, these are investment funds traded on stock exchanges, just like individual stocks, but with a core objective: to distribute a higher-than-average portion of their earnings to shareholders on a regular basis, often monthly. Think of it like owning a diverse portfolio of income-generating assets, all bundled into one easily accessible investment. These ETFs strategically invest in sectors and securities known for their consistent dividend or interest payments, such as dividend-paying stocks, bonds, real estate investment trusts, REITs, and preferred shares. The beauty lies in the diversification they offer, which can help mitigate risk compared to investing in individual high-yield securities alone. For those seeking a reliable and relatively hands-off approach to generating substantial monthly cash flow, high-income ETFs can be a truly compelling solution. Exploring different avenues for high monthly income. Now, let's explore some of the primary categories of high-income ETFs, each with its own unique characteristics and income-generating potential. Understanding these different types will empower you to make informed decisions tailored to your individual financial goals and risk tolerance. Dividend-focused ETFs, harvesting consistent payouts. First, we have dividend-focused ETFs. These funds invest in a basket of stocks that have a strong track record of paying regular and often increasing dividends. These are typically well-established, profitable companies that share a portion of their earnings with their shareholders. Imagine owning a piece of numerous blue-chip companies, all contributing to your monthly income. The key here is the stability and reliability of these dividend payouts, making dividend ETFs a cornerstone for many income-seeking investors. When evaluating dividend ETFs, pay close attention to the fund's dividend yield, its historical dividend growth rate, and the underlying quality of the dividend-paying companies it holds. Bond ETFs, the power of fixed income. Next, let's consider bond ETFs. These funds invest in various types of debt instruments, such as government bonds, corporate bonds, and even high-yield bonds, also known as junk bonds. Bonds generate income through regular interest payments. Bond ETFs offer diversification across numerous bonds, which can be particularly attractive in times of stock market volatility. Different types of bond ETFs cater to varying risk appetites and yield expectations. For instance, government bond ETFs are generally considered lower risk, but may offer lower yields, while corporate bond ETFs typically offer higher yields, but come with increased credit risk. High-yield bond ETFs can offer even more substantial income, but carry a significantly higher risk of default. Real Estate Investment Trust, REIT, ETFs, tapping into the property market. Another compelling option for high monthly income comes in the form of Real Estate Investment Trust, REITs. REITs are companies that own, operate, or finance income-producing real estate, such as apartment buildings, shopping malls, and office towers. By law, REITs are typically required to distribute a significant portion of their taxable income to shareholders as dividends. REIT ETFs provide an easy way to invest in a diversified portfolio of these income-generating real estate assets without the hassles of direct property ownership. The rental income generated by these properties translates into attractive dividend yields for REIT ETF investors. Preferred stock ETFs, a hybrid approach. Finally, we have preferred stock ETFs. Preferred stocks are a hybrid security that combines features of both common stock and bonds. They typically pay a fixed dividend, similar to bonds, and have a higher claim on the company's assets and earnings than common stock. Preferred stock ETFs can offer attractive yields and can be a valuable addition to an income-focused portfolio. However, it's important to understand that preferred stocks generally don't offer the same potential for capital appreciation as common stocks and can be sensitive to interest rate changes. How to identify the right high-income ETFs for you. A step-by-step guide. Now that we've explored the different types, let's get down to the practical steps you can take to identify the high-income ETFs that align best with your financial objectives. This isn't about chasing the highest yield blindly. It's about making informed decisions based on a holistic understanding of your needs and the ETF's characteristics. Step 1. Define your income goals and risk tolerance. How much monthly income are you aiming to generate from your investments? Understanding this target will help you determine the necessary investment amount and the required yield of your ETFs. Equally crucial is assessing your risk tolerance. Are you comfortable with potential fluctuations in the value of your investments in exchange for higher income, or do you prioritize capital preservation? Your answers to these questions will guide you towards the appropriate types of high-income ETFs. Step 2. Research and compare ETF metrics. Once you have a clearer picture of your goals and risk tolerance, it's time to delve into the specifics of individual ETFs. Key metrics to consider include dividend or distribution yield. This is the annual dividend or distribution payment as a percentage of the ETF's current share price. It's a primary indicator of the income you can expect to receive. Expense ratio. This is the annual fee charged by the ETF to cover its operating expenses. Lower expense ratios mean more of the generated income flows directly to you. Underlying holdings. Understand what assets the ETF invests in. Is it a broad-based dividend ETF, or is it concentrated in a specific sector? Diversification within the ETF is important for managing risk. Dividend payment frequency and history. While we're focused on monthly income, verify the ETF's payment schedule. Also, review its historical dividend payout record for consistency and any signs of growth. Fund performance. While past performance is not indicative of future results, examining the ETF's historical returns can provide insights into its overall track record. Index tracking. If applicable, many ETFs track specific market indexes. Understanding the underlying index can help you grasp the ETF's investment strategy. Step 3. Consider diversification across different ETF types. Just as diversifying within an ETF is important, consider diversifying across different types of high-income ETFs. For example, you might allocate a portion of your portfolio to dividend ETFs for stable income, another portion to bond ETFs for potential stability during market downturns, and perhaps a smaller allocation to REIT ETFs for exposure to the real estate market. This multi-pronged approach can help balance risk and optimize your overall income generation. Step 4. Review prospectuses and fact sheets. Before making any investment decisions, carefully read the ETF's prospectus and fact sheet. These documents contain crucial information about the fund's investment objectives, strategies, risks, fees, and historical performance. Step 5. Consult with a financial advisor, optional but recommended. If you're feeling overwhelmed or unsure about which high-income ETFs are right for you, consider consulting with a qualified financial advisor. They can provide personalized guidance based on your specific financial situation and goals. Example of high monthly income potential. Bringing it to life. Let's illustrate the potential for generating significant monthly income with a hypothetical example. Imagine you decide to allocate $500,000 across a selection of well-established high-income ETFs with an average annual dividend yield of 6%. In this scenario, your annual income from these ETFs would be $500,000 investment amount x 0.06 average dividend yield equals $30,000 per year. Now, to calculate your potential monthly income. $30,000 annual income / 12 months equals $2,500 per month. This is a substantial $2,500 landing in your account every single month, simply from your ETF investments. Of course, this is a simplified example, and actual yields and payouts can fluctuate. However, it vividly demonstrates the power of strategically investing in high-income ETFs to generate a meaningful and recurring income stream. This kind of consistent income can provide a significant boost to your financial well-being, offering greater flexibility and security. Navigating market fluctuations and reinvesting for growth. It's important to remember that the value of ETFs, like all investments, can fluctuate with market conditions. Economic events, interest rate changes, and sector-specific news can all impact ETF prices and yields. Therefore, it's crucial to adopt a long-term perspective and avoid making impulsive decisions based on short-term market noise. One powerful strategy to consider is reinvesting your dividend income. Instead of taking the cash payouts, you can automatically reinvest them to purchase more shares of the same ETFs. This allows you to harness the power of compounding, where your earnings generate further earnings over time, potentially accelerating the growth of your income stream and overall portfolio value. Key considerations for the savvy investor. Before we wrap up, let's touch upon a few key considerations for the astute investor venturing into the realm of high-income ETFs. Tax implications. Understand the tax treatment of the dividends or distributions you receive from your ETFs. Different types of income may be taxed differently. Consider consulting with a tax advisor to optimize your tax strategy. Due diligence is paramount. Never invest blindly. Always conduct thorough research on any ETF you're considering, paying close attention to its investment strategy, fees, and historical performance. Regular portfolio review. Periodically review your ETF holdings and your overall financial goals to ensure your investment strategy remains aligned with your objectives. Your path to consistent monthly income starts now. Generating a reliable and substantial monthly income through ETFs is not just a distant dream. It's an achievable reality for those who approach it with knowledge and a strategic mindset. By understanding the different types of high-income ETFs, diligently researching your options, and aligning your investments with your financial goals and risk tolerance, you can build a powerful income-generating engine that works for you month after month. The journey towards greater financial freedom and a consistent income stream begins with taking informed action. Now is the time to explore the possibilities that high-income ETFs can offer and to take control of your financial future. If you found this information valuable and are excited to learn more about building wealth and generating passive income, be sure to like this video, leave a comment with any questions you have, and most importantly, subscribe to our channel for more in-depth financial insights and strategies. We're here to guide you every step of the way on your path to financial success. Thank you for joining us today, and we look forward to seeing you in our next video. Disclaimer: this video is for equipping, educating, and empowering and should not be considered financial advice. Investing involves risk. Always consult with a qualified financial professional before making any investment decisions. Your financial well-being is paramount.